Hello everyone, so in today's video we're going to talk high probability trades. So in this video I'm going to show you how to find these high probability trades, and when you trade inside these zones then you have good probabilities to win your trades. So you will see how you can approach the market, and I will show you two types of trading that you can use to trade the forex market, trading the high probability zones. So first of all, we have to understand the technical analysis. What is an high probability trade zone? So as you can see, this kind of zones right over here are high probability zones trades. So basically, as you can see on the left side, we got an inducement first. So this inducement is going to induce all these highs, as you can see. After that, we got a break of structure. Then we got a build-up. So this is the liquidity here. And then we've got another inducement into the zone. And this is where we will be taking our trade. So I will show you some example right now. So as I said many times, if you want to find a great high probability zone, you have to find a 50% body candle with a good leg out that broke a previous structure point. And when you're going to look at this kind of zones on the daily time frames, 4-hour time frames, and also you can watch it on the weekly, then these zones right over here are going to be very powerful. Why? Simply, the bigger the time frames, the bigger the OFVs. We know that inside these areas we got a lot of OFVs, order flow volume. So the bigger the time frames, the bigger the OFVs, because when you got, for example, a 1 minute 50% body candle with a good leg out, then you can imagine that you're not gonna have the same amount of OFVs here on the 1 minute chart, and you're not going to have the same amount of OFVs on a weekly or daily zone, because the daily zone is stronger. The candle is on the daily time frame. So you have to understand that if you want to find the high probability zone, you have to look at daily, 4-hour and 1 hour. I'm not looking at high probability zones lower than the 1 hour time frames. Basically, I like to trade inside the daily zone. So I like to trade that way. I'm on the charts, and on the daily time frames, I see a daily 50% body candle with a good leg out that broke a structure point. Okay, so when the market is going to come back in this area right over here, I will go into the 4-hour time frames to see if I can find another 50% body candle unmitigated. So if I'm taking a trade in this scenario, this is great, because we are trading first inside a daily zone, and inside the daily zone we got a lot of sell OFVs. Okay, and inside that big daily zone we got a refinement, and the refinement is this 4-hour zone. So when the price is going to reach that zone here, we have good probability for the price to reverse, to make a reversal and then take the trade. So this is how basically I'm going to spot the best zone on the market. Looking at the higher time frames, and look at this 50% body candle with a good leg out that broke a structure point. And on the previous example, you have seen that I like to see something like that. This is basically a change of character. Okay, we are inducing all the people here that have their stop loss here, and all the people trying to buy the market here on this support level. Okay, And this zone right over here at the top is a pretty nice zone to look at. Okay, so this is the technical analysis. So this is all about finding this high probability zone technically. So as you can see, we got the sell scenario on the left side, inducement plus break of structure, then a little build up. What I mean by build up is when the price is building liquidity, when the price is making equal high just below a sell zone, just below an unmitigated sell zone. So basically, when the price is doing that, we have good chance for having a reversal into our origin area. And on the right side, you got the high probability buy zones: inducement, break of structure, build up, the market is building liquidity, and then huge push into our origin and then reversal. So our goal as a pro trader is monitoring price action inside these areas by combining price action with market sentiment. Okay, so this is pretty important. We have to combine this technical analysis with the market sentiment. So as I said many times, we have to know the rules before trading. We know that the forex market is a zero-sum game. That means at the end of the day, we got the same amount of winners and losers on the market. So if the banks and the financial institutions are making a lot of profits, that means a lot of people are losing money. And when a setup is too obvious, for example, you know that the banks and the financial institution, the algorithm, are going to play with it, okay? So we have to keep that in mind. So for example, if we are approaching an high probability buy zone and 85% of the retail traders are shorting the market, what can be the next move? So I will show you an example right now. So we got here a little bit of consolidation and then a huge move here, an adjustment phase followed by a break of structure, and we left and then mitigated, we will say 4-hour order block. Okay, and we know that this order block is unmitigated, and this order block is pretty powerful because we got first an adjustment, then we got a break of structure, and when the price is going to come back in this area, and if you see that the price is building something like that, we are creating a trend line liquidity or equal lows. Okay, the lows here are protected. So this case here is the build up. Build up. So they are building liquidity here. They want that the retail traders going to buy right now. And what they will do, once again, they will push the market in this 4-hour zone. And on the 1 minute time frame, what you have to look at is the price action, 1 to 5 minute time frame. And you have to see if we are changing in this market structure, if we went from a bearish structure to a bullish structure, and if we create this kind of candle, 50% body candle with a good leg out. And when you see something like that on the charts, you can immediately enter after that if we hit the 50%. And as I said, we have to be very careful when it comes to trading a 4-hour zone. What I mean about that is that inside this 4-hour zone, you're gonna have M15 price action, and inside this 4-hour zone, you will have inefficiency, some unmitigated area, okay? But overall, we have to remember that the most of the money inside this kind of order blocks are sitting at the 50%. So if you see a strong reaction at the 50% of this order block right over here, then you can ask yourself that 85% of the people are shorting the market. We got a build up here, we got a strong technical analysis, And if everybody is shorting the market, for example, in this area, a lot of stop loss are sitting here, and a lot of buyers have been trapped trying to buy the market from this fake support that was just the build-up. And when you know that if there is a huge movement in the market, it can be very easily in your side. So as I said many times, we do not predict, we react. We're not going to jump into the trade without confirmations, okay? Because most of the people that are reading the market sentiment are just placing buy limit at the top or the middle of this 4-hour order block, and they are praying, hoping for the price to go to the upside and take their profit. Okay, but this is not how the market works. If you do not have any confirmations on the lower time frames, then you're not going to enter the trades. We do not have enough liquidity to push the price higher. That's why the price is going to go lower. Okay, so we have to keep that in mind. But when you trade this kind of zones right over here, you have good probability to win your trades. Why? Because the forex market is a zero-sum game, like I said. And if all the retail traders, 85% of the people, are shorting the market and the market is continue to going down, then that means this is not logic, because the banks and the financial institutions are the ones right over here making money. And if everybody is winning, this is not how the market works. That they have to change that. So if we hit a 4-hour good buy zone, then if we got good signal on the lower time frames, then we can enter and then target all the sellers trying to sell the market here. So basically, we do not have to predict anything, but that can give you a great advantage over your competitors on the market. Don't be the liquidity. You have to read the 85% of the people shorting the market. You have to think like an institution, like a pro trader. What is the rule of the market? What are the rules of the market? How the market works? So don't be like the majority, because the majority is still losing money over again. So yeah, think about that. So we will see more details right now. So we can use this kind of trade ID, market sentiment plus technical analysis, with a fundamental analysis. If the fundamental analysis is in agreement with the technical analysis, our trade has a high chance of success. So, example number 1. We are approaching, as you can see on the left side, we are approaching a nice 4-hour supply area on GBP USD. First of all, on the right side, you can see that we got at the top an inducement move. This is great. After that, we got a break of structure and we left, that was a 1-hour unmitigated area. So as you can see, we got maybe a possible reaction from that level. So if we look at a little bit higher into this red box, as you can see, everything was mitigated inside the block. So I will show you why. So we got here on this schematic the zone. At the top, we got a 50% body candle with a good leg out. At the middle, we got also a 50% with a good leg out, like that. And at the bottom, we got another 50% body candle with a good leg out that broke a structure point. Why are we going to choose this area as our potential area to take a short on the market? Simply, if we look at price action very closely, you can see that the market went back here to mitigate this area already, then create another order block, and the market went back here to mitigate this area, and this area was unmitigated. So when the market made a move back into these zones, then this is done. The transfer is done. the position have been triggered and the market has made its movement. So the market doesn't have to come back to the 50%, okay? So we have to pay attention to every details. Inside the 4-hour area, we will get unmitigated area and mitigated area, okay? So if you look left here and you pay attention to the details, you can see that on the right side, the mitigation was done on the 1-hour time frames, and we can see it better on the 30-minute time frames. Everything was mitigated. Each order block was mitigated, and we left, like I mentioned here, an unmitigated 1-hour order block inside the 4-hour sell zone. So this is nice. We are trading inside a great technical analysis zone. So this is a high probability zone. Okay, nice. Now I'm looking at the market sentiment and I see that 85% of the people are currently long on GBP USD. Okay, so this is nice. If the market wants to make a big move, then we know that 85 of the retail traders are currently long on GBP USD. Okay, and then we have to look at our fundamental analysis. So at that time, there was a war in Ukraine. So right now there is a war in Ukraine. Investors are putting their money on safe havens. That means the USD is pretty strong. So this setup is on GBP USD. So first of all, we got an high probability zone. Okay, this is great. We got a 4-hour area, and inside this 4-hour area, we got a 1-hour unmitigated area. So this is pretty nice. Okay. Second, we got 85 of the people longing the market on GBP USD. So this is nice. We are not trading with all the retail traders. And third, the USD is pretty strong. That means GBP USD has high probability to go down. So everything is right. We got a good technical analysis. We are not following the majority of the traders, and the fundamental analysis is showing us great sign of strength in the USD. So what happened here? The market made a reaction from that level. So this chart is on the 15-minute time frames, and when you check the 1-hour time frame, you will see my order block. So basically the red zone inside this 4-hour zone was an 1-hour zone. So the market made a reaction on that zone because everything was combined, okay? And as you can see, we got a strong rally into our zone. And the market made a reversal at that level. And this is how you're gonna spot this high probability zone on your charts. This is pretty important. You have to combine these three information. First of all, technical analysis, inducement plus break of structure, build up. As you can see, we got a little bit of build up before this move up, and after that we got the fundamental analysis. So as I said, don't predict, react. The market sentiment and fundamental analysis are just tools for confirmations, okay? So you can only use the technical analysis if you're an advanced trader. That means if you are trading one pair and you see this kind of zone, then this zone is a high probability zone. Adjustment, break of structure, build up, and then another adjustment, and then enter in this area. So high probability trade zones are for me on the daily, 4-hour and 1-hour time frame, as I said, because inside them you got a lot of OFVs sitting. So this is how the market works. The market works because there is much more buy OFVs than sell OFVs, for example, if the market is going up. So we have to keep that in mind, okay? So after having found an interesting area, you will have to go on the smaller time frames to find an entry. So we will go more in details about a next video on the daily cycle. I will show you what kind of entry you can get, but basically we have to keep in mind that if we are trading a 4-hour sell zone, for example, we know that the majority of the money is at the 50% of this order block. And if we go on the lower time frames, so from the 4-hour to the 1-hour order time frame, sorry, and if we find an unmitigated area at the 50% of this 4-hour area, then that can be a great order block to look at for reversal. So as I said, this is the things to look at to find your high probability trade zones. So first of all, find a 50% body candle with a good leg out that broke a structure point on the daily, 4-hour and 1-hour. This is pretty important. This 50% body candle followed by a good leg out are pretty important. And look at this scenario. First of all, inducement to the upside, okay? We are here talking about a sell zone. So first of all, inducement to the upside. Then break of structure. Then build up. The market is building liquidity just below our zone. So that means if they are building something just below an unmitigated area, that makes sense for them to push the price a little bit higher, grab the liquidity, enter their position, and then grab the sell OFVs and then start to move to the downside. So you have to keep this scenario in mind, okay? So the question is how to find a great trading opportunity. So there are two types of trading. Trading one pair and try to catch all the movement based on the daily cycle, or trade multiple pairs and only trade the high probability trade zones in combination with market sentiment. So personally, few years ago, I was trading couple of pairs in combination with the market sentiment and with combination on the high probability trade zones. But right now I'm trading only one pair simply because I want to catch every move on a daily basis with the daily cycle. And what I like with trading one pair is that you are 100% focused on your pair. You know, you're going to go to sleep and you're going to wake up the other day and you will see what happened. And when you have 10 to 20 pairs in your watch list, this is pretty difficult to do that. So yeah, this is a choice you have to make. So personally, if you're an advanced trader, you can trade only one pair or two pair maximum. But if you're a beginner, you have more probability to win your trade if you are trading the high probability trade zones in combination with market sentiment and a little bit of fundamental analysis if we got a fundamental analysis. So as you can see here, we got a screenshot of myfxbook.com. So as you can see, this is basically where you're going to find the community trends, short versus long. So as you can see, for example, USD/JPY, all the people are going short, okay? So we know that the majority of the people are shorting USD/JPY at the moment, but if the market had to make a big movement to stop everybody, is to the upside, okay? But we're not going to buy the market without confirmation. And at this time, we have to keep in mind that the JPY is a safe haven. So JPY is pretty much strong at the moment. The USD also. So this is a little bit tricky to trade, but the majority of the people, more than the majority of the people, are shorting aggressively that pair. So that means, for example, if everybody is shorting the market and we are approaching a daily buy zone. So this is our daily buy zone. So on USD/JPY, that was around 90% of the people shorting the market. Everybody is shorting the market. We are approaching a buy zone like that, and the market is making something like that, an head and shoulder inside a daily zone. So you will see that maybe on the 15-minute, 1-hour time frames, it depends. This is not the same things most of the times. So if you see that 90% of the people are shorting inside a daily zone on, for example, an head and shoulder, this is basically a retail trading pattern, okay, then you can take advantage from that. That means if you can find an opportunity to enter the market here, you're going to enter the market here, and you know that the retail trader have their stop loss here, okay, just above the right shoulder, because they're taking their trade left and right shoulder in combination with Fibonacci and all this trend line, some retail stuff. So what you will do here when you see something like that, this is really interesting. You know that the majority is shorting and we are inside a great technical analysis, high probability trade zones. Then the market have good probabilities to reverse, to make a reversal into the next unmitigated area, and this is where you're going to take profit. So basically your job is to find a trading opportunity inside this area. And when you have found when you find a pair, for example, with a great market sentiment, if 90% of the people are shorting the market, and you see that we are approaching a daily buy zone, then you will add your pair into your watch list, okay, and you will follow that pair until a big movement occurs. So this is your job as a trader, okay, find the best technical analysis, high probability trades, find a great market sentiment, and also look at a little bit of fundamental analysis and go on the lower time frames to find your entry, okay. So this is a quick example on USD JPY. So trading one pair. So in order to trade a single pair, you need to choose a volatile pair, because if you don't want to get bored, if you, for example, you're trading NZD CAD, then there is not going to have much movement on a daily basis. You have to choose a pair with a lot of movement, aggressive pair like GBP USD, GBP JPY, or Euro USD. These pairs are great pairs. They are very volatile, okay. So by trading one pair, you have to master the daily cycle, okay. Asia session range, liquidity build-up, London session reversal, New York reversal. So we have to keep that in mind if we want to trade one pair, okay. So yeah, as I said, whether it is in high probability trade zone or in the no man's land. So for example, as I said, if you are trading, for example, here, this is the no man's land. We do not have much liquidity in the market, and the market can make aggressive movement. But if you are trading one pair, then you will be able to catch this movement inside the no man's land. And yeah, that can be very risky for the beginner trader. So our job as a pro trader is mastering price action inside the no man's land, because if we wait for the price to tap our 4-hour zones, major zone, then you will not take a lot of trade on a weekly basis, okay. So we have to master the daily cycle, and you will see on this daily cycle video all the things that you can look at to find great trades. So at the beginning you may take fewer trades, but after a few months with this pair, for example GBP USD, you will be more confident and you are going to take more trades, okay. So now trading multiple pairs. So this is very interesting because it can allow you to trade only the high probability trade zones in combination with market sentiment. So your goal will be to find the pairs on the market that are most easily bought or sold using myfxbook.com. So you have to go to myfxbook.com, go to market sentiment and find a great pair. So the rule is that there must be 85%, so 80% to 85% of the people who are short or long on the market, and that we are in high probability zone. So if we want to take a buy on the market and 85% of the people are shorting, then this is good. So moreover, the fundamental analysis must be in our direction. That means if we got a war, like at the moment, and we want to trade GBP USD, we know that at that time the USD is pretty strong, okay? And you see that 80% of the retail trader are shorting GU, and we are approaching a daily buy zone or 4-hour zone. We will say we are approaching 4-hour zone, okay? 80% of the people are shorting the market, but the USD is pretty strong, and this is why you have to pay attention to that, because this kind of analysis, taking a buy when everybody is shorting, for example, it works very well when the market sentiment is neutral, when the fundamental analysis is neutral, when we do not have any war in the world. So when the USD is pretty strong, for example, if you are trading GBP USD or GBP JPY, there's our safe events, the JPY and the USD, then your zone is going to be weaker, okay? So we have to keep that in mind. The market is following the fundamental analysis when we got a war. So your trade here is not right now a high probability trade buy, okay? So we have to look at the fundamental analysis before taking a trade inside these areas. So as I said, there must be 85% of the people who are short or long on the market. And if we want to go short on GBP USD, we need USD to be strong, okay? So as I said, I've made good profit using this strategy, because in this high probability trade zones, we will go on the smaller time frame to find good entries using the daily cycle. So basically, yeah, the win rate was pretty good because I was trading inside good technical analysis, high probability trade zones in combination with the market sentiment. So everybody was doing was shorting or buying the market inside my area, and that was great, because if I wanted to take a buy position and everybody was shorting the market, then we got here a move down to an unmitigated order block. So I will go more in detail on the lower time frames on the daily cycle, but you can also find my backtesting session video that will help you with the market execution on the lower time frames. But anyway, when you find something like that, 85% the people shorting the market on a daily buy zone, we got a lot of buy OIVs here. A lot of buy OIVs inside this area. So the market easily made a reaction to an unmitigated area first. So we have to keep an eye on it. When you go to myfxbook.com and you see a pair that is aggressively shorting, and you see your technical analysis and you see that we are inside the daily zone, then you have to add this pair to your watch list, okay? And this is how you're gonna find a great trading opportunity. And don't forget to look at the fundamental analysis, because the fundamental analysis is stronger than the technical analysis when, for example, we got a war, okay? So keep that in mind. So as I said, find what's the best for you. Everyone has their own preference. Personally, right now, I prefer to work with one pair and be 100% focused on it. I will be trading the early session. So yeah, as I said, our goal when we are trading one pair is to master the Asia session, London session opening, New York session opening. So this is basically the daily cycle, okay? So practice both and see what works best for you. So first of all, go on the demo or just go on to your real account, but decrease your lot size, risk a little bit more, and see what works the best for you, okay? Respect your risk management, have a good risk reward to reward, at least 1 to 3, And the golden rule is do not predict, react. Because when you're going to find a great setup on the market, for example, you are approaching a sell zone and you see that a lot of people are buying the market, you see that the market is building liquidity, you got your move up here, then a lot of people are going here and say, okay, perfect, we got a good technical high probability trade zone in combination with the market sentiment, and the fundamental analysis is neutral, so I can take my trade with no problem. And they're going to risk 20% of their capital, they're going to be in profit, they're not going to put their stop loss at break even, and maybe if we don't have enough liquidity, the market is going to be a little bit higher, they're going to be stopped out, and yeah, they're going to cry. So respect your risk management. And as I said, this is all about experience. When you're going to see something like that, over the experience, maybe that will be very easy for you to take a trade from that level. But anyways, respect your risk management, respect the risk to reward. And yeah, on the daily cycle video, you will see everything about how you can combine this kind of high probability trade zone with market sentiment. For example, if we got here an Asia range, Asia session range, London opening into our zone, 85% of the people are long, then if we got a reaction from it, we can easily take a short position and target the stop loss of the buyers here. So yeah, basically this is all you can find as high probability trade zones, and you can rewatch the video a couple of times if you want to be very focused on your zones. So yeah, basically this is all about finding these high probability trade zones. First of all, adjustment, so this is the technical aspect, break of structure, build up, adjustment into our zone, and then if we got a reaction, then we take our trade. If we do not have any reaction, we do not take our trade. And this is the difference between pro traders and retail traders. The retail traders are going to put a sell limit at the zone without knowing what is going to happen. So this is just predicting, this is gambling. And the pro trader is going to look at price action on the lower time frames to see if we can find something interesting, and if he gets an entry, then he will enter the market and target the next unmitigated area first as a take profit one. And then if we are inside the weekly zone, we got a lot of OFVs, so he knows that the market can easily go into the downside to find a daily zone, for example, a daily buy zone. So this is all about the market sentiment.